I'll now invite Dr. Masroor Riaz and Professor Mushtaq Khan to join me on the stage for our macro panel discussion. Please come on the stage. I think some of the other things I wanted to touch on, the way I would maybe split it is we can talk about some of the near-term macro challenges, but also what are the longer-term structural improvements in the Bangladesh economy. And particularly I wanted to touch on one of the things that I feel is maybe an immediate challenge, a near-term challenge, but also a long-term positive, which is actually the governance revolution. So I think that I think something that many investors that I spoke to are interested in is the monetary revolution also going to be a governance revolution? Are we going to see major structural changes in governance, particularly in reductions in corruption levels? The white paper that Zaid Bai was on the co-authors, it mentioned $16 billion per year of black money siphoning, a total number of $230 billion over the 16 years. So it's a massive number. So that's one of the questions that I'd put to the panel. And what is this entrenched corruption and governance problems? How is that affecting the immediate challenges for the economy? And do we see that changing? Another question for the panelists to think about is also, this is an interim government. So when we get to an elected government, will there also be a reversal back to type in terms of governance, or we see something structurally different? I don't want to talk too long. Maybe I'll start with Professor Mushtaq Khan. I'll introduce, he's a professor at SOAS University. He's also the head of the anti-corruption evidence unit in a project in SOAS. And he's a recognized global expert on corruption. And he's also on the panel. He's on both a commissioner panel. He's on the Reform Commission for the Anti-Corruption Commission, and he's also on a committee that is reviewing energy contracts. So he's the best person to kick off the conversation on about is this a governance revolution going to be real? Mushtaq Bhai, please.
I don't think my mic is. Let's hope this mic is working. Yes, this is working. Okay, so I'll pick up on some of the things that Dr. Zahid Hussain was talking about. The revolution or uprising that happened because there had been a growth of the unsustainability of the economy. And this unsustainability was essentially a governance problem. A governance problem that had crept up on us very, very gradually and reached a point of unsustainability. And the question that IFTI asks is it changeable? Are we on the cusp of reforms? Now, if you listen to the current government, its agenda is reform. It is here to do reforms. So the question is, what does reform mean and what is feasible to achieve? Let me step one step back and say, how did this come about? I think what happens when you have a very early stage developing economy, like Bangladesh was in the 1980s, when the growth takeoff started, if you have a very simple, very early stage economy, which is very informally organized, then emerging businesses, emerging entrepreneurs solve a lot of problems using informal mechanisms. In other words, they use corruption to solve the problem of corruption. So you have a system where you have a lot of networks, a lot of informality. How do you do business? You do business by developing your own networks and your own connections, and you find your way around the problem. That worked very well for the first 10, 20 years, till the economy started becoming more complex and the businesses became bigger, but their habits didn't change. So they continued to operate. Instead of moving towards a more rules-based, a more regulated system, with contracts and enforcement, they continued to operate on the basis of, I know that politician, I know this bureaucrat, I can do my deal and I can get my contract, and I don't care what happens. When you talk about governance, governance is not just passing new laws. The problem was that people weren't following the laws, and you can't solve that problem by passing new laws which are trying to force people to follow the laws, because these laws will also be broken. So ultimately, you have to ask, what is it that makes a society rule following? What is it makes a society follow contracts and enforcement? It's not that you are passing new rules to enforce the old rules. Ultimately, societies become more rule following when powerful actors in that society start to understand that enforcing the rules on each other is in their own interest. If that happens, we will be on the cusp of reform. Now, I think that one of the real miserable facts of the business community in Bangladesh is, if you look at the business associations, if you look at how these associations have behaved in the last 10 years, you can understand where the problem comes from. You would have thought the business associations would have been the place where pressure came on the government to open up markets, to have better regulation, to make sure the banks were not being stolen from, to make sure that the statistics were more accurate. Instead, what did we see from the business community is, in every association meeting, the associations were politically captured. To get into the leadership positions of the associations, you lobbied the government, not the business. The people who achieved power were the people who were politically connected. And in every meeting, they began the first 15 or 20 minutes singing the praise of the Prime Minister and singing the praise of the party. Now, you cannot get reform in that context, right? And the people who were the best connected made enormous amounts of money. So what Dr. Zahid Hussain was describing, the banking crisis, didn't happen because the banking regulations were wrong. It happened because people went with guns and captured the boards of banks, took them over, lent themselves money, and used over-invoicing and hundi to take the money out of the country. No rules or laws is going to stop this. It's only going to stop when other businesses, other capitalists stand up and say, we are going to down tools and stop production. We'll close down the banks if this continues. Now, you could say the businesses were scared, and they were scared that if you spoke up, you would be victimized. And that is true. If one person spoke up, they would be victimized. The first student who put his arms out, Abu Said, was shot, died. But when 1 million Abu Saids came out, the government fell. What business has to understand, it has to organize collective action. Associations should act collectively. Whether it's a banking association or an industry association, we are not going to get governance reforms till industry steps up, before businesses step up, before everyone steps up and takes their responsibilities seriously.
Let's take a break there and maybe now come to Masroor. I think one of the things that one of the things that you and I have talked about, we'll come back to the banking sector and the capital markets in a minute, and also the energy sector. But one of the things I'd like to get your thoughts on, and then we'll move to Zahid Bhai, is what about the future growth drivers of the Bangladesh economy? So you and I have talked in the past about, maybe this is also an opportunity to reset industrial policy, develop new export markets. What is your thoughts on the new growth drivers, the sectors? What should the interim government be doing? What are the interesting sectors for investment? So, across to you.
Thank you, Ifti. First of all, big thank you to EPL and AT Capital for putting together this very timely event convening important stakeholders to investments, both FDI direct as well as portfolio. Uh, I think to understand the growth drivers of the future, we have to shed a bit of light on the growth drivers which got us here over the last few decades. Uh, I fully agree with Professor Khan and then Dr. Hussein's presentation. Last 15 years was a very tough 15 years in terms of governance, quality of institutions, quality of policies, and its impact on economy. And however, as Dr. Hussein said in his presentation, Bangladesh's golden years for reforms, particularly economic reforms, were perhaps 90s all the way till 2003 or 4, and then move towards prudential regulations from economic regulations started in the late 70s when the private sector orientation was leveraged or adopted, and then liberalization gradually started, financial markets, trade. It all got extra boost, very structured, disciplined, evidence-based from 19s. As a result, we had a great decade. And during that, the growth drivers, there were three which were most important. The agriculture, which of course we see the share of agriculture in GDP shrinking to about 11-12%, but still 37-38% of the workforce draw their income from agriculture, agribusiness, agri-supply chain. And 47% almost of the nation's income is spent on food. So that and gradually the agri jobs became more gainful in the and sort of created the purchasing power and prosperity. Second, the ready-made garments, which is a subset of the export-led growth strategy, which really worked well, helped Bangladesh to leverage the power of global markets. Whether Bangladesh could have done it even better, that's another debate, but it did benefit from that. Thirdly, the remittances. This is, let's say, the average last few years, $21-22 billion formal inflow. But it is assumed an equal amount comes through the informal channel, which doesn't help the balance of payment from getting stronger, but still helps the domestic consumption because of the demography of the recipients and their economic needs and so on. So these three really helped the growth's will to move faster, created more gainful employment, and brought Bangladesh through the 5 decades from a very poor, economically fragile country to where it is today. It would have been far ahead had we not seen the democratic, institutional, and economic decay that we saw in the last 15 years. Now, building on these three and also shifting gears going forward, what got us here may not necessarily get us where we want to be. We want to break out of LDC graduation, whether we have it or not. I know white paper committee head said we should. I heard planning advisor saying we cannot reverse, but there are examples of reversal. But if I put LDC graduation, if we aside, Bangladesh still made it to lower middle income group back in 2015, which is categorized by the World Bank group, right? Now, whether we can move to upper middle and then at a sort of future time to perhaps to higher income, now that's where I think we should be pursuing. And moving from lower middle to middle and upper middle, that's where we have to rely on the power of the global markets. Domestic economy, purchasing power, we hope with the right policies, recoveries, will continue to grow, but it will not be enough for 180 million people strong economy to move to the level where we want to be in terms of growth, in terms of income, in terms of prosperity. We will have to leverage the growth, the global value chain and the power of global trade. And that's where we have to break beyond RMG, and we have to break beyond European Union and North America being our dominant or almost close to 80-85% of our market. So we have to diversify our products into new competitive sectors beyond RMG. And you ask which those sectors could be. If you look at economic complexity measures or approach, we cannot leapfrog from something we have been doing well and hence developed our competitive advantage, entrepreneurial and worker skills overnight to something we have never done and hence don't have the foundation. So that's why we need to look into the economic complexity, the product space matrix approach. And that's where building on the RMG strength and what we learned from there and the strength we mobilized from there, we could break into leather and footwear. We could break into light manufacturing and the global politics. There is a tailwind for these two sectors as well. Trump 2.0, China +1, leather and footwear. China is very dominant, but if you look at the composition within China, the Taiwan and Japanese entrepreneurs, they dominate as FDI in China about footwear. They all want to diversify. Just one more, light manufacturing. And I know many Japanese investors are connected virtually. The Japanese is now actively exploring when it comes to light manufacturing, electrical, electronics, machineries, a China +2 policy, very specific. The two being India and Bangladesh for slightly higher tech-oriented product in light manufacturing. India, slightly lower tech-oriented product for Bangladesh. And this is very real. And if we can put the right investment climate, right investment promotion strategy, the right trade environment, and the productivity, we can leverage this. And finally, one area we have to bring in as a new growth driver is services exports. The next few decades is going to be the decade of digital economy. According to WEF, World Economic Forum, new value addition, economic value addition between now and next, let's say 2030, 70% of that is going to be from digital economy or around digital economy. Bangladesh, we have done very little in terms of service exports, particularly ICT or technology-led exports. It's only 10%. For India, it's 48%. For Vietnam, it's over 35%. And that's where we have a great opportunity to bring in, starting with technology and service oriented. But in the interest of time, I'll stop there and I'll come back with your next question. Thank you.
Okay, thanks very much, Master. Actually, picking up on that point, if we think about what we think about that one of the drivers of the August the 5th, the Monsoon Revolution, it was our youth. That was the key change agent that nobody had anticipated. So I think one of the questions for the panelists and for us to discuss, how do we create an innovation and knowledge economy that's going to, what was the catalyst for this revolution? I think in part it was, of course, there was proximate causes around civil service, called BCS qualifications. But I think the broader issue was a lack of job opportunities for tens of millions of young people and across the whole economy. There was also another driver was increased income and wealth inequality and increased opportunities inequality, which has been a trend globally. I think that's behind, I think many things, the election of Trump and Brexit and many other macro factors. But I think coming back to the youth, I think one thing would be great to get the panelists' thought is, and we have AI revolution going on right now. How do we, position Bangladesh to benefit from the AI revolution? So that, I think that's one thing we'd talk about. I'd also like Zaid Bhai to talk a little bit about, you mentioned we're also have a number of global geopolitical earthquakes from the election of Donald Trump, and that's going to change many things. We also have regional earthquakes in terms of some tensions between India and Bangladesh, and I'm optimistic that these can be resolved. But these earthquakes, and we now, of course, have just had the Syrian revolution and adding to more volatility in the Middle East. So we all hold these different global and regional geopolitical earthquakes. Maybe we can talk about geopolitics first, and we'll come back to Masroor on innovation. But Zaid Bhai, would you like to talk a little about geopolitical shocks and what you think that means for Bangladesh?
Hello. Well, on the global outlook, I think there is a mixture of good news and bad news. On the good news side, I think we can be fairly confident that the commodity prices, at least in 2025, is on a declining trend, and I don't see any reversal happening there. And particularly when Trump says, drill, baby, drill, that may be bad for the global climate and all those things, but the short-run effects of more U.S. drilling is lower oil prices and therefore all other prices that are connected with oil prices. So on the commodity price front, I think the short-run outlook is a decline, which is very good news for Bangladesh because it does matter a lot for our balance of payments and for domestic supplies. The other good news globally is on the interest rate front. As I'm sure you all know, that the Federal Reserve has already reduced interest rate by about 75 basis points, and the secured overnight financing rate in last 1 month has declined from 5.3 to recently about 4.56, 4.6%. And this secured overnight financing rate is very important for our trade financing. And also it's increasingly getting into the multilateral financing contracts. Many of the ADB contracts and the loan contracts with the World Bank are now directly linked to this SOFR. So when that goes down, our interest payment bills, it will make it easier to keep them contained. Where I'm not quite sure is about the future of US dollar. Now, recently, US dollar has appreciated globally. If you look at the US dollar index, my personal take is that as of today, dollar is overvalued. So if that is correct, then we can expect some decline in the international markets of US dollar, which will also be good for Bangladesh. The most uncertain global factor, I think, is on the trade front. And the new US administration has already committed to increasing tariffs on China, Canada, and Mexico. And they have also said that they are going to impose 10 to 20% additional tariffs on all imports, which means we will also be affected. But that's not the only problem. The bigger problem is how would the big trading partners of the United States would respond to the Trump tariffs. And if, I think, which is a nightmare scenario, if there is retaliation and counter-retaliation, a tariff war, then one thing you can be sure is that the global trade is going to shrink.
Let me give a chance now for Mushtaq Bhai and then Masroor to speak. So maybe Mushtaq Bhai, you can talk on geopolitics, and Masroor, you might want to talk about innovation, economy, and jobs. Mushtaq Bhai, please.
So I think that the geopolitics that affects us directly in the next few years will be how we change our relationships with India and China. I think this is going to be extremely important for Bangladesh because we are heavily dependent on trade with India, but it is largely an unregulated trade. We are also becoming dependent on India in power imports, and this whole question of regional connectivity in power raises very important questions of dependence and how that dependence might affect other things we do. So this is something that will be evolving, and I think that if I can read the tea leaves, there is a growing demand in Bangladesh to not be excessively dependent on any one country. So I think there will be a move towards balancing our dependence across multiple players, And I think the ferocity of the Indian response to the departure of the Awami League regime reflects that they also understand this. They also understand that Bangladesh will be moving away from an extremely close and unconditional dependence on India. So this is one thing. China is going to be another interesting player, but China, which has a lot of investment interests in Bangladesh, is also going to be one of the countries that Trump will be looking at. So if we want to attract the China escaping investments, we'll have to balance how much China has a role in Bangladesh. I think this geopolitics is so uncertain but it's the most important one for us, the US, China, India triangle and how that affects Bangladesh. Can I just add one more thing about the youth? Because this is not just a problem for Bangladesh. Across the world, technologies are becoming more and more labor saving. So if you look at the growth of robotics and artificial intelligence and so on, you can grow your per capita GDP, but you find it increasingly difficult to grow employment. And employment is the one thing that is a trigger of unrest. We are seeing this in India. India has relatively high growth rates, but joblessness is driving political conflicts within India and the growth of Hindutva politics and right-wing politics because it's not being able to create jobs. So I think I'm with Dr. Mr. Riaz here. We also need to look at middle technology value chains. We need to look at things like footwear and light engineering and manufacturing and take some of this global chain stuff which is more labor intensive, which creates jobs, but it is not the really exciting AI and robotics and so on, but that will save us politically. So we need to actually move and keep our strengths in labor intensive middle technology stuff, which is extremely important. It might be a slower growth in GDP, but a faster growth in employment. And this trade-off is extremely important for a very heavily populated country like Bangladesh. We should aim primarily to create jobs. That should be our number one economic objective, is job creation, and look for technologies which are job creating, and everything else will be okay.
Okay, thanks, Professor Mushtaq. Mashru, did you want to jump in?
Yeah, just building on the very last point Dr. Khan just mentioned, extremely important that Bangladesh pursues policies to promote job-led growth, not jobless growth. Now, you want me to shed light on innovation. Now, depending on where you focus on innovation economy, knowledge economy, it's a bit of path for Bangladesh before it can get to knowledge economy. We are at the moment still in labor intensive. We first need to move to skill intensive and then perhaps gradually to knowledge. But between this skill intensive positioning that where we are positioned at the moment and getting to knowledge, where do we focus on innovation? So the first point, it has to be the elements which are more job intensive. But before I get there, let me give you where we are starting from. On Global Innovation Index, some of our competitor countries, Vietnam, 48th, India, 39th, Indonesia, 54th, Bangladesh, 106th. This is probably the second or third lowest in Asia, if not the lowest. I remember 2 years ago, it was the least innovative country in the world. Skills is going to be critical for innovation. Where do we stand on skills benchmarking? Global Skills Index, 94th. Vietnam, 54th. And if you bring in the institution, skills, infrastructure, including digital infrastructure, the finance, all of which are going to be important for promoting innovation, one good benchmark to look at, a composite benchmark to look at, is the Global Competitiveness Index, which has 12 pillars comprising all of these, which I've just mentioned. Bangladesh is 105th, Vietnam 67th, India 68th. So we're starting from a quite difficult position. Why? because we feel, I think Dr. Hussain mentioned in his presentation, perverse policy ignorance, client-patron relationships, including in the digital economy sectors, made us miss the boat second time from 2009-10 onwards, when technology started leapfrogging, machine learning, AI, IoT, and things like that. However, we do have a lot of foundations. I mean, you look at the demographic dividend. We have a youth-led workforce. We have a gradually increasing educated, although at the moment unemployment is very high in that segment. But there is a robust segment of educated youth. We have now greater global connectivity in terms of technology, but in terms of partners. And I think one change, this surgery that Dr. Zahid Hussain mentioned happened, political surgery, July, August, it made us more meaningfully and strongly connected to the more advanced economies of the Europe and North America than, let's say, the South Asian neighborhood. And that's a great enabler for digital economy and innovation leap. Thank you.
Thank you. We're about to come to the Q&A session. I also wanted to, when we talk about geopolitics, and you were talking about Professor Mushtaq about balancing India versus China, I would also say that this may be an opportunity for us to think about deepening our relationships with the U.S. So I think we have to be thinking about a very different multipolar engagement in terms of economically and politically. I think let's go to the first couple of questions so we can have it more interactive. So Mr. Ruchir from Asia Frontier Capital, he's asking, when does Bangladesh Bank see inflation peaking out? What are the key risks to Bangladesh economic recovery, and is the key risk political? We do actually have, we have the Honorable Bangladesh Bank Governor coming in the next half an hour, so I don't want to repeat what he's going to say. But maybe, Zahid Bhai, you can give, where do you see inflation? We'll ask the Governor when he gets here, but where do you see inflation peaking out? And what is the key risk to Bangladesh's economic growth or recovery?
Well, it's very hard to predict.
When he arrives, but I think that there is there's that balance between traditional macro tools, which is monetary policy, and there is a debate in Bangladesh whether keeping interest rates high is the right strategy. The government may well argue that that's the main tool that he has, the central bank. But I think that the improving governance and transparency and efficiency in the supply side, I think you touched on that. That's going to be also very critical. We had some macro shocks, the unprecedented floods right after the August Revolution. We had these floods in September. But the syndicates and the lack of transparency in supply chains is also something that the government is trying to tackle, and it's going to be very important to structurally bring inflation down over the longer term. There's also a question from Mr. Abdus Hamid from London about in terms of governance reforms, are they going to be durable? We've already talked about that. He was asking about skills, and maybe one thing we can maybe Mashur could touch on this is actually the skills in our bureaucracy. So I think that we need to, when we talk about governance revolution, it's how do we change the culture to one of transparency, and change the culture after 50 years of AL and growing lack of respect for governance, increasing corruption, permeating through the whole system. It's a major challenge that the government is undertaking through various reforms. But what are your thoughts on both the culture and governance in the bureaucracy, and how do we create a new culture?
Yes.
I mean, reforms in civil service.
Well, there can be different layers or orders of reform. There can be business processes reforms. there could be legal and regulatory reforms, and then there is civil service reforms. And each of that can affect the transparency, the integrity, and efficiency of the bureaucracy. The most difficult one, perhaps, is the last one I mentioned, civil service reforms. And Dr. Zahid Hussain knows, as we used to say within the World Bank Group, that majority of civil service reforms of World Bank Group and major development partners have not succeeded around the world. It is so difficult and so entrenched. But there are low-hanging fruits as well. There are retail-level reforms available as well. All you need to do is bring in more transparency, efficiency through, for example, as I say, business process reengineering. And Bangladesh, the business processes which define how government bureaucrats go about analyzing applications, licenses, renewals, service delivery decisions, many of them are very, very old. They don't reflect the modern time, the modern practices, modern business or citizen needs. So this can be quite low-hanging fruit. Of course, resistance can still be high, but these are majority of them can be done with stroke of pen. You basically sort of change the processes. Secondly, automation or technology, adoption of technology, which brings in both transparency, accountability, but also efficiency. And it has been, despite the program called Digital Bangladesh of last 15 years, very little has actually happened in bringing in right digitalization or automation of G2B and G2C services, government to business, government to citizen services. So automation. And third, I think, which has to be a long-term approach, the mindset change, because without mindset change and complementary safeguard measures, accountability measures, no reform will sustain.
So I'm going to come to Mushtaq Bhai. Firstly, you want to make a comment about the civil service and governance. I think after that, I'd like to comment on the energy sector, because I would say the two main pillars of the Bangladesh economy, which is the banking sector and the energy sector, were both decimated by a British understatement, governance challenges, endemic and massive corruption. And I think that your calculations, is it $1.4 billion of extra fiscal burden per year or something of that order from overpriced energy contracts? And I think that, the reform in the banking sector is mission critical for restoring the Bangladesh economy to long-term structural growth. But I would say the energy sector and infrastructure more broadly is very important. So anyway, across to you, Mushtaq Bhai.
Thank you. So I think these are the really critical questions. What is feasible governance reform? And I think that what we talk about mindset, you see, the state and society are interacting. The civil service, the politicians, are the state, and on the other side is business, citizens, and other stakeholders. Now, the problem that I began with is, if business and stakeholders do not have the interest or the power to constrain the state will collude with the powerful to steal money. It's as if you can give them whatever technology and training you like, all the digital systems and digital procurement. We worked on the digitalization of government services in Bangladesh over the last 5 years, and I can tell you that simply digitalization in itself has almost no effect on corruption, because you can fix it. The only protection against corruption is when society itself steps up and says, we will not accept it. Corruption in Bangladesh has been completely transparent over the last 20 years. Everyone knew who was corrupt. Everyone knew how they were making money. Everyone knew where the money was going. It wasn't a transparency problem. It wasn't even an accountability problem, in the sense that the accountability systems were there. It's just that no one used it because they didn't feel that they had the power to challenge it. Now, I think that for me, the most important thing to make governance reform work is that society has to change the distribution of power. And I come back to business associations. Business associations will play a critical role in this if you can get your act together and actually represent business instead of representing sectional interests of big businessmen who are using the association to make money. In the same way, political parties have to get their act together, and political parties have to put pressure on the state to get things moving and to get accountability. So, reform is not just fixing the civil service and training them and giving them technology. Reform also means that we as society, students, political parties, businesses, need to get their act together. This brings us to this problem of power sector. What we found in the power sector is that even in the last 10 years, or since 2010, when the act was passed, there were plants which were commissioned, which were relatively cheap.
So which act?
2010 Act.
If you tell
The Speedy Power Act. Okay, the Speedy Power Act gave the government the right to grant contracts without competition at whatever price they wanted to whoever they wanted. This is the source of the crippling overpriced power contracts that Bangladesh now has, which is costing us, according to our estimates, $1 billion a year in excess payments. This is unsustainable. Every year, $1 billion in excess payments. Now, not all of these plants were overpriced. Some of them were relatively competitively priced and some of them were higher priced. And if you look at what's the difference is even in this poor governance structure that we had in Bangladesh, the ones where there was more competition had lower price. And competition was very closely related to the fact of feasible ways in which you could reduce risks for politically unconnected investors to have an interest in investing. And one of those things was the access to a line of credit that was a little cheaper, which reduced the risk of politically unconnected investors. They became interested in bidding, and suddenly the price dropped in those bids. So if you want to make governance work, you need to find ways which are feasible in the present context of making people who have the power but feel threatened to speak up and compete. Competition is the best guarantee against corruption. The syndicates are operating because we cannot organize competition in the supply chains in the market. Why? Because if you are not politically connected, it becomes very difficult to enter those markets. Now, we have to break those political constraints to enable politically unconnected people to enter the market. That is governance. So governance doesn't mean you pass a law saying we will have competition. Governance means actually getting new players into the market and finding the feasible ways in which you can do that, whether in the power sector or in the food supply chains. This is the really innovative work that we have to do.
Yeah. So I think also you were, as part of the Energy Review Committee, obviously still ongoing, but you're also potentially you're finding what would be a fair price for these contracts and then potentially looking to have them reviewed. So it's an ongoing, I know it's a legal process, so we can't talk about it in too much detail, but this is not an academic exercise. This is a live exercise in terms of finding a sustainable reset. We have the last 7 or 8 minutes before we move to Charlie Robertson, and then for a fireside chat, and then we'll have a tea break. I think everybody's macroed out. But in the last, I think 7 minutes, 10 minutes or so, let's finish with some comments on is this next 1 year, 18 months, 2 years, however long it's going to be of the interim government, is this all going to be for nothing? So are we going to go back to business as usual? And I'm going to steal Mushtaq Bhai's own analysis, but I think one of the most compelling macro analysis pieces I read was something he wrote for Prathamala and the newspaper here. So I always use his analysis when we talk about asset recovery or many other initiatives the government's taking. Going back to business as usual is simply not an option. And I think that there needs to be a clear understanding and recognition what was happening before August the 5th in terms of where this it was a macroeconomic shift which was, or a runaway train that was heading to, about to careen off the cliff. And I think that we were heading towards Sri Lanka or maybe worst case Zimbabwe in the next 6, 12, 18 months. I'm being a bit sensationalist. And I think that's, ultimately the hollowing out of the economy, not just of institutions, but the bankrupting of the banking sector and the energy sector and many other sectors was reaching a point of unsustainability. I don't know whether Ponzi scheme or Madoff is the best macroeconomic analogy, but I think that's where we were heading. So the option of going back to the same playbook as AL had is simply not an option. And I would also say, again, not to mix my metaphors, but the sort of King Canute not turning back the waves, that's also true for macroeconomics as well. And history is littered with dictators and despots and even democratic governments who think they can, define macroeconomic reality. And we saw that with Rajapaksas in Sri Lanka, in many other countries as well. So I don't actually see the next elected government being able to sustainably re-embrace the AL playbook. They may try. If they do that, there will be another major macro shock potentially, and or another revolution if we get towards economic and financial insolvency. So I think on that backdrop, maybe Mushtaq Bhai, you could start, then Zahid Bhai, and then Mashur, you could finish. So please. Is this going to be sustained? What?
Well, I don't know if it will be sustained, but if it is not sustained, we are finished. I think we've reached the point where this economy cannot continue in the old way. It's too complicated. When you have a simple economy, everyone can work their way through the system based on their personal connections. I know this minister, I know this politician. You can find a way through. But that works if you have 24 businesses and you are a very simple economy. If you are a complex economy, and Bangladesh is becoming a complex economy, you need financial products, you need a stock market, you need to raise money for large projects, you have foreign investment, you have internal markets with contracts. You can no longer operate this on I know this person and I know that person, and I do my deals. This has to move towards a more regulated, rule-following, contract-based system. It's not going to happen overnight, but it has to happen. And it will not happen, and I repeat this, it will not happen by the government simply passing rules and laws saying it has to happen. It will only happen when powerful actors in society believe that it is in their own interest to make it happen. And that includes all of you. It includes business, it includes lawyers, it includes academics, it includes students and politicians. When all actors in society start saying that, actually, this cannot continue, we are all going to die unless we enforce rules on each other, that's when things start changing. And I think we are on the cusp of that. There is a growing recognition. Remember how this whole movement started. The student movement started with a traffic movement. The traffic in Bangladesh did not work because everybody was breaking the rules. And people on the street understood that it's killing all of us. The traffic movement became the quota movement, which became the end of the Awami League. So actually, if you talk to young people, they are completely in line with the fact that now we need to start following rules. These young people haven't made the revolution to make money. They have made the revolution because they want a rule-following society that is fair. It is up to our generation to understand that mood. It is not business as usual. Young people want a rule-following society. They want a liberal, open market society where people follow rules. I go and give lectures in the universities, and this is what I'm seeing in front of me. These are brilliant. The gem of the life of our society are our youth, and our youth is the future. They have understood that we need to change. If we, the business community, academics, lawyers, doctors, we don't start behaving in a rule-following way and putting pressure on our peers when we see our peer is not following the rules, is using connections to get privileges, and we don't stop them, we don't raise our voice, we are betraying this opportunity, and that not only is betraying the opportunity, we are killing ourselves. And that's what we realized in July, that we had come to the point where we are all going to get killed because the society was going to implode.
So thanks, Mustafa. Zaiba, do you think this is going to be, is it going to go back to business as usual? Do you think this is going to be sustained when the next elected government comes in?
Well, you say that this going back to business as usual is not an option. I think it's not an option by design, but it could become an option by default. So, how do we prevent that? I mean, I can give you two silver bullets. One is we need new countervailing powers in politics. And unlike my friend Mushtaq, I don't have a lot of expectations of from the business association fulfilling that role. So, new countervailing power in politics could be students, could be, I don't know, and greater contestability in markets. These are my two silver bullets, and I have no idea how to get this done.
Yeah, I think Professor Khan and Dr. Hussain said it all. There's no option to go back. I think we have seen what it means for citizens, economy, country, our reputation, everything, right? I think there are the July, August, which saw more than 1,500 lives being sacrificed, also gave us some strong pillars. I think there is precedent about how such autocratic and despotic behavior ends in a country like Bangladesh. There is consensus that these are not acceptable, and there is social capital that exists. And they're not static; they may change. But I think if we can leverage these three foundations, which will lead to what Professor Khan also said, that everybody doing their share of the responsibility. I'm hopeful that going back is not going to be the reality. But does it mean that reforms are not going to be reversed? Well, reforms can be reversed. It's very difficult to guarantee sustainability of reforms. The biggest judicial reform Bangladesh had, and perhaps the biggest electoral reform Bangladesh had, was in 2007 and 8, the judiciary separating from executive, and we saw the worst judiciary of Bangladesh in the next 15 years. The 90 million voters got the NID, and it was said never again, including from development partners, never again forgery in vote, and we saw the worst elections taking place in the ensuing 15 years. So this will be a constant battle, but there are lessons and examples how to safeguard those reforms. And I think we probably have a glass half full rather than a glass half empty going forward.
Well, we have two other questions. I'm going to come. Asif Khan had a question about educational institutions and reforms to educational institutions. We'll come back to that. But I would also like to make another observation about, I hope, another form of governance revolution. And I think we're all who've been in Dhaka for the last few months. I remember I was sitting in a traffic jam, and the traffic jam was caused by yet another spontaneous protest from students about something. I think it was about Titamore College or something like that. And I remember thinking, oh, this is really annoying. I'm stuck in traffic for 2 hours. But then when I thought about it, I thought, actually, it's important. I mean, I being inconvenienced or us being inconvenienced for a few hours because students are protesting. I think yes, I mean, after the French Revolution, after the Russian Revolution, I mean, the Russian Revolution, 1917, revolutions are messy, and the aftermaths of revolutions are messy. But this sense of freedom to protest, willingness to protest. I'm not saying we should be a society where every day there's a protest, there's a disruptive protest, but this is a key part of making these reforms sustainable. So we need to also recognize the freedom of the press, the transparency of the press, the freedom to protest. These are key checks against, in addition to macroeconomics, to going back. I think we also now have a Mr. Takao Hiroshi would like to speak. He has a question, so maybe the team can put him on to ask his question. Is the technology working? And this will be the last question, then we're going to come to let the panelists leave. They have an urgent, two of them have another engagement, Zahid and Masroor, and then we'll have the fireside chat and the break. Please, can you turn up his volume? It's a bit quiet. Yes, we can hear you now. Please, if you introduce yourself, please. Takao Hiroshi, where
Is Takao music?
Yeah, that's all. The United States. The type which style is about. So my question is, if investors aid a company that like very up, would that give the enticement for you the spices we want? Thanks.
well, that's a very interesting question. I think it will feed into the next panel discussion on banking and capital markets, but we can certainly get some finishing feedback from and comments from the panelists. I think, at least from my perspective as a capital markets participant and observer, I would say I'm not sure our capital markets are efficient enough to reflect good governance. There's no evidence yet, but that may be something that we need to, find the right mechanism whereby our capital markets can more fairly reward good governance and punish companies that have bad governance. And I think that comes back to legal and regulatory reforms in our banking and capital market sector that actually holds bad governance companies to account, and also rewards good companies. And I think the second thing is actually our financial press. I would also say since August the 5th, I've been extremely impressed by the quality of business and financial journalism. The quality of our journalism in general, and our business and financial and journalism in particular, has improved dramatically. And I think that investigative journalism on money laundering and black money and malfeasance in the banking and the capital markets is really critical. But maybe with the panelists, do you want to comment on Hiroshi's question about how to reward companies with good governance for Bangladesh?
So I think one problem is that an investor can only deduce governance by looking at the profitability and growth of the company. Now, if you are in a context where you have a lot of competition, a lot of innovation, then a company that is growing, that is profitable, must be well governed. But actually, that is not the case in a country like Bangladesh or any developing country, because companies which have better political connections are better able to protect themselves using their political connections, are better able to get contracts because of their political connections, will show higher profitability and higher returns. And from the investor's point of view, you want to invest in the country that has better growth and better returns, and this can often be politically connected companies. So to give you the classic example, if you didn't have all these stories of corruption, you might think Adani is a very good company to invest in India because it is growing rapidly and showing returns. But why is it showing good growth and good returns is because it is a politically connected company and it is getting all the contracts. Now, the same thing applies in India that I was saying should apply in Bangladesh, that the competition between capitalists is not intense enough in India to make life miserable for an Adani. I think this is the problem. Now, what you need is big pressure from business. So if you go back to American history, in the 19th century, American growth was driven by the robber barons, as they were called. They were driven by the Rockefellers and Carnegies and so on. Then in the early 20th century, there was a big political movement from the middle-sized capitalists and from populist politicians to break up the oligarchs, and then comes the Sherman Act. And the Sherman Act, or the Antitrust Act, breaks down these big monopolies, which are called trusts in America, and the antitrust movement actually opens up the space for a new phase of growth. Okay. Now, this is not driven by investors investing in companies. It is driven by the business sector itself becoming more competitive and politicians forcing competition. I think that is what is required. If you just leave it to investors, investors will go for the more profitable companies which are politically connected. But if you leave it, what you have to do is to force competition. We need a Sherman Act in Bangladesh. We need politicians who will break up the big monopolies and force competition. We need small companies and middle companies to insist on open market access and more competition. Those political pressures will create the kinds of companies in which investors can pick the more profitable.
Yeah, I think one other, I mean, I would say in terms of Bangladesh's capital market, the investor segment that most values governance and most penalizes bad governance is actually international investors, many of whom are listening to this, are participating in this event virtually. Unfortunately, Bangladesh has one of the lowest foreign investors as a percentage of the market, less than 1% of any country in the region. So I think if we have more foreign investors, they would value governance more. The second observation, and I don't want to drag this on too long, but I think the Adani indictment from the US has definitely had an impact on Indian stock markets. And so I think that there is, I wouldn't say, I mean, very politically connected companies that are very profitable, but do things that cause a reaction in the international governance framework through Foreign Corrupt Practices Act is something that I think markets are also going to get more nervous about. At last few, I think, closing comments, Zahid Bhai and Masroor, would you like to?
Well, on the capital market, I think one of the puzzling things you see, you look at the company fundamentals and their market prices, you would struggle to find a correlation between the two. So I think if I had to pin down on where reforms should begin for improving the relationship between the fundamentals and the market prices, I think it must begin with the credibility of financial reporting, the balance sheets and then the financial statements.
Okay, and last comment. So, just responding to our the gentleman from Japan who just spoke, the Japanese gentleman from the U.S. I think Bangladesh market does reward better governed companies. Examples: Telenor, their most profitable market is Bangladesh. Unilever, until the macro issues started, Bangladesh was one of their top 5 profitable markets around the world. BRAC, Standard Chartered Bank, despite the destruction of the banking sector fundamentals, they kept their NPLs to standard global best practice level, yet increasing their profit. And same companies like ACI, Square in the capital market, if you look at the fundamentals and their profitability, good governance pays off in Bangladesh.
Okay, well, I think now I know that Zahid Bhai and Masroor need to leave for another thing. So would like to thank everybody on the panel, Dr. Zahid Hussain, Professor Mushtaq Khan, and Dr. Masroor Riaz for their participation. And I think it was a very dynamic and rich discussion. And we'll close this session, then we'll move on to Charlie Robinson's fireside chat and then the tea break. Thank you very much.